Discord wasn't letting me come in. How's everyone doing today? Good morning, Cav. Good morning, Luciano, Gary. Guys, good to see you. Hey, Michael. Nice to have you. How's everyone doing today? You guys feeling all right? Cool, cool. Sorry, I got caught in a NASDAQ long. Um, I know my brother posted in the other room. Good morning, Walter. I was just sharing with you guys. So I'm taking everything that he's going to be teaching in his seminar, and he's teaching it to me. I'm his practice. Not bad. I'm up a little over 1,100 bucks on a four lot this morning. Just simulating, getting in, taking these trades, not fighting anything. So that's what we're going to talk about today. How do you guys do it? How do we get to where we want to be? What are you going to do to get it done? So we're going to start the same way we ever start. Always start. Um, da, da, da. And for those of you that know my brother's and mine relationship, is he comes up with new stuff and I fight him tooth and nail as hard as I can, for as long as I can. And then eventually I submit and I get better. Good morning, DJ. And guys, this is how I learn. Unfortunately, I learn through resistance. Ron, did you get squared away? Did you see what I sent you? I want to make sure. Guys, if you ever have technical difficulties, I'll always do my best to help you out. Um, but did you see what I was saying, guys? So, Ron, we rolled, but you got rid of your 12 and it was trying to open 12 on your saved workspace, it looks like. Guys, today we're rolling crude oil, possibly. So I'm going to build a market analyzer before we ever look at news. Let's make sure that we're looking um, at the market with the most volume. And guys, I say this every time. Whoops. I say this every time crude oil rolls is well, first we have to get crude oil over into our list, right? But guys, when the volume is 50-50, when the volume, no worries. So, Ron, make sure that you have 1223 in there. And then I'm going to put January 24 in there so that I have both, right? And then I'm going to click OK. And then Ron, check your Dropbox right here. It's probably trying to load 1223, but you didn't have 1223 on your list on the picture that you sent me, because you probably already removed it. So go to your drop down and try and get it in that 124 and see if that works. I hope it works. And then guys, I'm gonna see which crude is moving. You tried that? No good? Have you shut it down and turned it back on? No, Alinsky 8 will actually roll itself. It'll send you a little notice that says roll. Guys, if you look at the volume between the two, January very much is the one that we're looking at. Ron, I'm not sure then. Unfortunately, I'm not a very good tech guy. Um, and I have exhausted all the things that I know how to do, which is not very many when it comes to tech. Jason's busy for sure. I know that he'll get to you ASAFP. I'm gonna put that picture in the room. And guys, this lets us know exactly where the volume is. The January contract is leading the way, 92,000 versus 24,000, and the market just opened. So what I do is I go to my instrument manager. If you're on 7, if you're on 8, it's just going to do it great. Make sure that that crude 124 is in your list, and then come to your upper right-hand corner. Get that out of your way. And I'm going to link my charts. I'm going to make the L the same color, which means that they're linked. So when I make this change to 124, it's going to change both of them. And that's going to put me on the most current contract. 99% of you are on NinjaTrader 8. This is irrelevant. But if our charts look different today, there's a very good chance that we're looking at different contract dates. It looks like they were pretty similar. And then I'm going to go to news, guys. We had 8:30 news. Unemployment claims came out. I'm not sure what it moved. I wasn't in front of the computer. At 9:15, I've got industrial production. It's medium impact. This 9:15 news may move the market. It may be a little shaker. Um, so understanding where the news is really huge. It's a great advantage because you don't get caught up in the middle of it. You don't try to take trades when there may be a violent reaction coming from the people that move the market. And then everything that I talk about, guys, comes from the education page. I say this every day, and I'm looking, I know that I've got some new people coming through. If you're brand new with me, let me know. Use your voice. Tell me, because I want to make sure that you're good. I want to make sure that you're taken care of. I want to make sure that I give you just a little bit of support where you may need it. Um, so make sure that you say, "Hey, Mark, I'm new. Spoil me rotten," and I absolutely will. I'm going to go to the tutorial section, guys, and this is where all the rules that I talk about come from. So when we talk about rule number one and the T3 trigger lines, and we talk about those termination conditions, all the way down to the rules, anything and everything that you need to be successful with the software is laid out right before you. Nexgen is the greatest hammer that you could buy. It's $1 million gold-plated hammer. You just have to learn how to swing it. And that's what the room is, guys, is we're going to teach you to swing your hammer, and we're going to focus very much. I'm going to show you the path. We're going to spend the first hour. We're going to learn the trigger lines, the Fibonacci rules for when it's okay to trade. We're going to talk about one simple trade. We're going to talk about a high probability trend trade. This is a trade that everything on every chart agrees. Like nothing disagrees with the trade going in the direction that you want it to go. It's pretty much an outstanding feeling. It breeds confidence. Um, but we're going to take our first hour and we're going to talk about that high probability trend trade. And the reason that I talk about the high probability trend trade, and again, we'll just go here and define it. Each indicator, every chart agrees for the rules for the trade. Guys, this is when your triggers are the strongest, when there's nothing in the way between you and your targets, no termination conditions. But the idea isn't to give you one trade that's going to make you a bazillionaire, right? The idea is to give you a trade that creates a foundation, to give you a trade that's going to teach you how to read your indicators, because that's what it is you're stepping into this world of reading brand new indicators, looking at your charts and saying, what the hell does this mean? And my job is to tell you exactly what it means. And you're going to become a chart reader. You're not going to worry about being a day trader in the beginning. You're going to be able to look at your charts and understand what your indicators are telling you. You will very fluently be able to understand where the market is likely to continue. And you're going to use these spots for entries, for that highest probability trend trade, for medium probability trend trades. When maybe there's a problem in the way, you'll be able to use it for high volume area trades, for momentum style trades. But this likely to continue point comes from your ability to read the charts, and this is going to be entries. You're also going to understand where the market is likely to go. And when you understand where the market is likely to go, what that's going to do for you is you're going to begin to hold for bigger moves. You're going to begin to understand when that market has a better chance of getting, whoops, to the next key area. And it's going to allow you to capture larger profits based on a couple little factors. And then finally, you're going to understand where the market is likely to stop. And I can't stress the importance of this one too much. Where the market is likely to stop is what we call termination conditions. And termination conditions is that 6'5" angry guy standing at the door of the bar. And when he tells you you're not coming in, sometimes you just have to accept the fact that you're not going to hit the dance floor, right? Termination conditions tell you exactly where you shouldn't go. Termination conditions tell you where the trend might end, where the market may reverse. And there's really no reason to pick a fight with termination conditions. You'll be able to identify these as the likely to stop area. Um, and then we're also going to use those termination conditions when they do reverse the market. When the market reverses from one of those key areas, it's going to set you up for the highest probability trend trade that you can take. And this section is called First 30 Days and Beyond, because why on earth would you stop taking the best of the best? But during the first 30 days, guys, focus on this high probability trend trade. Focus on the absolute best of the best. And that's the trend trade that happens after a termination condition. on your large chart. And when you take these very basic concepts and you become a chart reader, you're going to realize that 90% of your day is just spent reading your indicators, waiting for a statistical advantage, putting yourself in a position where you're trading a pattern that repeats itself. You're trading a pattern that's been proven to win more than it loses. The patterns don't know what market you're trading. They don't know if you're trading stocks, futures, options. They don't know if it's cryptocurrency. The patterns are the patterns, guys. And so let's focus on that. The workspaces that we look at primarily are the S&P and crude oil. They tend to flow very nicely. They tend to create a lot of opportunities during the day. But we're going to do this. We're going to focus on the high probability trend trade. It's only three rules. Three rules that teach you to recognize three advantages: momentum, a clear path, and an entry area. And this is the recipe for a trade. The second you omit one of these advantages per the rules, you fall out of the good grace of the high probability trend trade and you move yourself into a medium probability trade. You can have momentum and a clear path, but not the best entry area, and still find a way to make profits. You can have a clear path in an entry area, but maybe not the best momentum, and still find a way. You just have to manage these trades a little more assertively. And your chart reading will allow you to manage these trades a little more assertively. So we're going to focus on three rules that create a trade: the highest probability trend trade, the trade that gives you confidence through the memory of success because it typically wins 70 to 80% of the time. And you guys are going to hold yourself back and you're going to do it on only two charts. You're going to focus on a large chart and a small chart, and these two work symbiotically to give you the best of the best entries, the highest advantage trade. Your large chart will lead the way. That's my catchphrase. They're going to put that on my tombstone. Large chart leads the way. The large chart is what the large crowd wants to do. The large crowd is this guy, Norbert. Norbert is the big money investor. Norbert is the guy that's going to create the trend. Norbert is the guy that's going to establish the momentum. He's the guy that's going to react to those key areas that you have the advantage of seeing. This is your large chart. This is the one that leads the way. It's going to define direction, momentum, and areas. And your first two rules happen on this large chart. Um, when your first two rules are met for that high probability trend trade, you will have the advantage of momentum as well as the advantage of a clear path, nothing between you and your target. And all of this happens on one bar on a large chart. We very rarely use our rear view mirror on the large chart unless we're determining that we're coming from a termination condition. Once the two rules are met, all you have to do is turn your attention to the small chart. The small chart is, for all intents and purposes, what the small crowd wants. The large crowd moves the chart. The large crowd establishes the trend, direction, momentum, everything that you need to look for an entry. And the small chart is going to take the one bar on the large chart and it's going to refine it down to 15 to 30 bars on that smaller, faster chart. This is where you will pinpoint with amazing accuracy where the market is likely to continue. You will be able to literally use a limit order to let the market come to you. And it's going to happen at areas, once again, from lines. We trade from lines, we trade to lines, and you'll be able to pinpoint right here where the market is most likely to continue based on the advantages provided by the large chart. So two charts. By using the small chart, guys, we're able to reduce our risk dramatically. We're actually able to increase our profit potential quite a bit as well. And we're going to do that this morning. We're going to learn the rules. I want you guys to simulate. If you're uncomfortable with the simulator, ask some questions. Let's get you comfortable with it. Because one of the things that you have to do when learning something is you have to do as much wrong as possible because the human body learns through suffering, right? The human brain really adapts and moves forward through adversity. I'm going to tell you right now, yesterday was my first study with my brother, really getting in and going through the exact same process I ask you guys to go through with his classroom. And I made about 1,000 mistakes, and I made them all on simulator, and not one of them ruined my day. Not one of them made me feel like I wasn't going to be able to pay my mortgage or my car payment. But what it did do is I have three pieces of paper with scribbles on it. I've got about 50 pictures, and I know what not to do. So I'm going from Let me mess everything up so I can get focused. And it really only takes a couple days of making mistakes to learn how to avoid them. Don't practice the wrong trades. Give yourself the advantage of following the rules, of having a statistical advantage, because luck definitely runs out when you go live. And then we're going to simplify today, guys. We're going to talk about the high probability trend trade. We're going to focus on the best of the best. We're going to put ourselves in the position to gain confidence through the memory of success, a trade that typically wins 70 to 80% of the time. Guys, this is your 38 feet of concrete that you're going to build your trading skyscraper on. This is your foundation. And you just have to know what looks you're going to commit to. Well, you're going to commit to the looks of momentum, a clear path, and an entry area. And then we have to go through repetition over and over so that they become easy. I tell people plan on taking at least 15 pictures a day. Because if you take 15 pictures a day, guys, you're taking, what is that, 75 pictures a week? That's 300 pictures at the end of study, of 30 days of study. Let me show you why chart reading doesn't have to be difficult. Because the more pictures you take, I'm at 6,800 right now. Today is the 16th. I've got pictures all the way down here from yesterday. Where did my first picture yesterday start? Somewhere down here. This is the 15th. Everything above it is my study from the last 24 hours, guys. And the more pictures you take, the quicker you're going to get to where you want to be. And the more of those pictures that you post in the room, that you annotate, that you talk about why you did what you did, that you express your feelings on what was going on, the faster you're going to get to where you want to be. And then the second route to getting you to where you want to be as soon as possible is use that spreadsheet that Nexgen gave you. It's right in the 90-day study picks, and it's just a trade journal. And this is pretty cool. This particular page of the spreadsheet was designed by a Nexgen user to get the most out of her trading, of her education. And you'll notice she's not in this room anymore because she's off being a day trader. But it talks about what you did, whether or not the rules were met, and even how you felt, because how you feel has a pretty big impact on whether or not you're following rules. It talks about what happened, and then there's this section for notes, guys. When you post it in the room and I give you feedback and it contradicts or maybe adds something to what you wrote on your chart, put it in the notes section. And the idea is you're going to come back, everything you did yesterday, you're going to study today. Everything you do today, you're going to study tomorrow. And I want you to ask yourself, what worked, right? What was good for me? What really got me to where I wanted to be, and what didn't work? Maybe taking those 50-50 trades with divergence from a bad bottom, eventually you're going to get tired of it kicking your butt, but you're going to begin to recognize that pattern in yourself that you seem drawn to them. I'm going to recognize that pattern in you because you're presenting in class, and we're going to work together to eliminate that. What feels easy and keeps you relaxed are typically rules-based trades. What feels forced, what makes you nervous. Guys, your brain knows when you're breaking rules. It knows when you're taking chances, and you'll feel it in your palms getting sweaty, your stomach getting upset. Good morning, Debbie. But this little study each and every morning, guys, it sets you up for the day. It gets you in a position. Hey, good morning, Edwin D. Nice to see you in here. So we're gonna do this together, guys. We're gonna go through. You're gonna take pictures so they become easy. And on your spreadsheet, you're gonna fill up your personal trade looks. Every time you take a trade that fits the rules, every time you take a trade that is your favorite trade, that's a trade that you want to take every day, put it in the room, or put it in the room and put it in your spreadsheet. And then I'm going to give you as well the client trades, guys. These are next-gen users providing me about 275 pictures of their entries, of their management, getting into the market, getting out of the market, annotations, talking about advantages. I've added to this the entry sequence when you're looking for the best of the best spot for entry, what it takes to get into the market where it's most likely to continue. This spreadsheet, my version, has a very mechanical management for beginners. It has ideas on the NASDAQ if you're choosing to go that suicidal route. It's fast for the new user, guys. And then there's patterns that repeat themselves over and over. There's termination conditions that happen all the time. And all of this is on this spreadsheet, guys. And I'm going to drop it in the room right now So good morning, and there you go. There's my spreadsheet. Steal these, click on these, study these, ask questions about these. Guys, if you click on a picture, and this says Paul's Perfect Short, and I have no idea why it's bouncing around. We'll try it again. There we go. Sometimes it takes 2 clicks to wake it up. This is Paul's Perfect Short. It's okay for you to take a picture of this and say why. What's Paul looking at on this chart that gets him into this trade? Can you talk me through it, Mark? And I will say absolutely. All you have to do is copy it, drop it in the room. Just because Paul posts it, just because it's on the spreadsheet under Paul's name, doesn't mean that it's not an opportunity for you. So make sure that you're going through and clicking on that spreadsheet. Give yourself every bit of information that you can, and then more importantly, if something isn't clear, ask about it. And the same holds true as we begin to talk about these rules, guys. We're going to talk about rule number one first, because it makes sense, right? Rule number one. Your large chart, the big chart, the one that moves everything, the one that reflects what the people in charge want to have happen, must have strong trigger lines. And I'm going to tell you right now, strong trigger lines is about the easiest lesson that you're going to get. Let me go to my pictures here. So I'm going to give you the first cheat code for the video game that is day trading, guys. If your trigger lines and your background are not the same color, you do not have strong trigger lines. It's that simple. If the background is green, your small triggers, these solid lines, and your large triggers, these dashed lines, should be green. They should be wide in the direction of the trade. This is the only way that you can have strong trigger lines. Good morning, Sydney. What these strong trigger lines mean, when the small break above the large triggers and the space is created between small and large, it's like scissors opening up. That gap between the two, the space between the two, lets me know that the odds are favorable for the market to continue up. I have what I like to refer to as odds favorable momentum. Odds favorable momentum will break through Fibonacci areas. Odds favorable momentum will carry the market typically to the next key area. Odds favorable momentum leads the way for a reason, because when you have a boatload of momentum, it increases the likelihood that that market is going to continue in the direction of the trend. When the background is red, both small and large triggers must be red. The space between the two lets me know that the odds are favorable for this market to continue down. Once again, odds favorable momentum. You're going to hear it in the room all day long. You're going to see it annotated on charts as OFM. And man, odds favorable momentum covers mistakes, guys. Because when I have the strongest trigger look, this is the most advantageous time to buy Fibonacci support on a smaller, faster chart. On the large chart, this one bar, remember one bar sets the story. It looks like a tail or a wick. We can't possibly trade the tail or the wick because by the time it forms, the market's off into the distance. But what this wick represents is a pullback on that smaller, faster chart, on that refinement chart, and you will be able to pinpoint right where the bottom of that tail is most likely to happen. You're going to wait for it with a limit order, and this is what's going to get you into that high probability trend trade with all that momentum carrying you off to your profit targets. And you see it on resistance in a downtrend as well. So rule number one says odds favorable momentum. Rule number one is the most current bar on the large chart. And if you look at the NASDAQ, the smalls are below the large are wide, they're angled in the direction of the trend. This is odds favorable momentum, 100%. If you go to the S&P, the large have turned, they're getting wide, the smalls are below. Look at the space between the two. This is odds favorable momentum. This is a market that's likely to push in the direction of the trend. And then for my crude oil people, my small triggers are inside of the large triggers. They have weakened the large triggers. And that's the second half. When the small triggers work their way inside of the large triggers, it's a weak large trigger. Anything can happen up or down, and you're going to see it annotated on charts because we love to write on our charts as ACH. Anything can happen. You're going to see reversals quite a bit with anything can happen. you are going to see deeper pushes back. Maybe that'll take you out of a good position. So when you lose that momentum, things are changing, guys. And this is rule number one. And it doesn't happen all day long. Remember, 90% of your day is spent waiting for this advantage. 90% of your day is sitting on your hands, drawing a picture, playing a video game, reading a book, whatever it takes to keep you out of the market when there's not an advantage. But you'll notice that momentum, whoops, what did I do? Momentum pushes the market down. Anything can happen triggers precedes a reversal, which creates odds favorable momentum. There's one of those tails on that smaller, faster chart. You guys got long right at the bottom of that tail, and it rocketed you up to your profits. And then we lost the momentum again. Those anything can happen triggers, and sure enough, the market reverses. There's one of those tails. You guys get paid. And then we get into one of the safeguards that rule number one provides you. You'll notice that the large triggers are red and the small triggers are green. I can't have odds favorable momentum. You'll notice that the background is green, but the triggers are red. I can't have odds favorable momentum. This is your giant waving red flag to say, do nothing. You have no advantage. The market, we don't know what it's going to do. The buyers and sellers are fighting, and you don't have to get caught in the middle of it. This is a transition period, guys. This is where there is no clarity. Um, this is where people tend to predict. I think the market's going to go up because my small trigger is green. I hope my market goes down because my triggers are red. And this is where people get chewed up quite a bit. And when they get chewed up, accounts get smaller, they get frustrated, and they stop waiting for odds favorable momentum. Eventually, somebody's going to win, guys. And when they do, that's where the advantage comes. So, is everybody good with this, especially my new people? Odds favorable momentum, guys. Strong trigger lines. Large chart leads the way. This is going to set you up. Rule number one, the advantage of momentum. We're 1/3 of the way to a trade. Everybody's good. Can I get a Y in the room from you guys, especially my new guys? I say the same thing every day, but I promise the more you hear it, the easier it gets. Once we have odds favorable momentum, guys, termination conditions false. I have to have room to the profit target, right? I have to make sure that I'm not trading into one of those lines. What are the lines? For those of you that are brand spanking new, here's your map to what you're looking at. The lines that may reverse the market, the lines that may create an untradeable bounce, the lines that we are going to identify as potential termination conditions are going to be red Fibonacci resistance and blue Fibonacci support. Guys, we know about these lines long before we ever get to them. Yellow one-to-ones. We're also going to look for these divergence high lines and these divergence low lines. Magenta from a high, cyan from a low. What divergence means, and I'm going to keep everything simple because, guys, I am not the smartest tool in the shed, right? Divergence means loss of momentum. That's it. That's all it is. It's a loss of momentum. So when the market goes up and down and prints this magenta line, and this doesn't print until about the third bar, this means that your sellers stole the momentum from the buyers. There's a loss of momentum. When the market goes down and up, and this cyan line prints, again, about the third bar, it means that your buyers stole the momentum from the sellers. We can see this visually on the charts and know that even though price pushed to here, momentum didn't follow. And these will come into play as potential termination conditions. So we're going to do that. Let's go to the tops and bottoms section. Awesome, Ron. And we're going to use the F to load or reload, but also when you move time markers to see history. Let me think. So, Biff, there's a couple things that are challenges. My brother actually has about 5 programmers working every day to try and smooth this out with the NinjaTrader issues. Um, a lot of it, the more you click and drag on a chart, the more challenging it becomes. There are some little things that you can do to set you up for the best of the best. Making sure that your data is clear, using the capture software instead of drawing on your chart. And if anything is calculating, let it calculate before you start trying to click and drag everything. Um, some people have challenges, some people don't. I almost never had crashes on 8. Almost never. But I do everything with Snagit to take my pictures. I don't touch the charts a whole lot. I just kind of trade them. Um, you can get with Jason and have him do a little check on your computer and make sure everything's good. That's exactly what Jason's for. Um, so let him do that. Let him put eyes on it, and hopefully we can get that 100% sorted out. You're welcome. You guys will find, especially you new guys, I've been saying this for years, I'm not a very good tech guy. I was an English lit major. I am a daydreamer for sure. And I'm learning tech slowly and surely, thanks to Jason, thanks to my brother. But there's some things that I can't resolve. I'll try to resolve everything I'm capable of, though. Let's talk about termination conditions. Everything starts with price reaching the area. Let's make this arrow a different color. Um, we'll make it the color of money. Price reaches the area. These dynamic Renko bars come down and they reach Fibonacci support. Price pulls back, reaches Fibonacci resistance. That's the key. That's the first part to identifying a termination condition is price reaches the area because the areas are where decisions get made. This is where buyers buy. This is where sellers sell. These are the areas where profits are are taken. And guys, when price reaches the area, when your dynamic Renko bars reach an area, decisions are going to be made. Sometimes the decision is that the buyers couldn't care less. They're going to let the sellers continue down. Sometimes the decision is that the buyers are going to test the water and they're going to push a little hard. Sometimes the decision is that there's going to be this huge fight that you don't want to be in the middle of. But when price reaches an area, in this case support, and all of the trigger lines remain above the area, no more short trades. You're looking at a termination condition. You're at an area that may stop the market. Um, and then the same is true into resistance. If price reaches Fibonacci resistance and all the trigger lines remain below, well, then you've reached a termination condition. We're not looking for long trades into that area because it may create a bounce. It may break. And that really is the simple recipe for termination conditions. If you reach an area and the triggers don't break, just sit on your hands and do nothing. And I don't think I can make it any more simple than that. Is everybody good with that? Price reaches an area. If the triggers don't break, let's get off of crude because they're in a crazy downtrend. Price reaches Fibonacci support. None of the trigger lines get through it. This is an area that may stop the market. This is an area that may create the bounce. And look at the bounce that it creates. And then they come back and they retest it. Price reaches support again. None of the triggers break. Look at the bounce. And you'll see it here where when support breaks, it begins to behave as resistance and creates opportunity. Price reaches support, the triggers don't break, that sets them off to the upside. Price reaches resistance, none of the triggers break. And look at the consolidation in the market that happened around 4 a.m., caught between areas where price reach and triggers didn't break. Guys, these are where decisions are made. These are where buyers and sellers are going to fight it out. Um, and that's your basic recipe for termination conditions. If price hits an area, triggers remain above, sit on your hands, do nothing. There's no reason to guess. There's no reason to hope. There's no reason to wish, want, or pray. Just don't go short into it. Don't go long into it. Wait for it to break. And if it's going to break, guys, both your small and your large triggers will get to the other side of the area. In this case, they both get to the other side of support, and notice how it behaves as resistance. We find our advantages with a clear path, and the path is clear when small and large have broken an area, and very often, once it's broken the area, you'll see it pull back. And this is where you guys are looking for a trade with that odds favorable momentum, with that clear path. That's the top of that tail, right at resistance that used to be support. So it's a pretty simple recipe for the new user. We're going to keep it focused on only two options initially. If price reaches the area and the triggers don't break, the area is not broken, the path isn't clear. If both the small and the large get to the other side of the area is broken, the path is clear. It really is that simple, guys. Price reaches and it starts the decision-making process, but it's the triggers, not the price bars, that tell you when an area is broken. Is everybody good with the simple recipe? Two options for the new user. And then when you're good at these, it's going to open you up for the third option. The third option are areas with the potential to break. Remember that I said strong triggers break things? When price reaches Fibonacci resistance and the small triggers smash through, embrace the idea of smash. When they smash through the area with odds favorable momentum, this becomes an area with the potential to break. There are no guarantees of it breaking, but it has the potential because of the momentum. The potential goes up if it's coming from a termination condition. But because the area is not broken, it's only potential. It's not a clear path, guys. It's going out on a date with your best girl. You walk her to the front door. The potential for that goodnight kiss is there. But until your lips collide, it's just potential. So we don't bank everything on it. We wait for perfect scenarios when we look for these trades, because if you look left, that one had the potential to break, and sure enough, it reversed and went off to the distance. So these are termination conditions, guys. These are designed to keep you safe, to keep you out of trouble, to keep you from trading into areas likely to stop the market. And you're going to see them in all shapes and forms, guys. Price comes down, creates a pivot. Buyers steal momentum from the sellers. There's that divergence low that we talked about. Price created this divergence low. Price did not reach this divergence low, which means on its own, it's not a termination condition. But when price reaches the divergence low, the trigger lines remain above. Now we have what's called a pivot stop out. This is a termination condition. And if a termination condition creates a full reversal, we are going to call it a strong bottom. And a strong bottom is the precursor for the highest probability trend trade long that you can take. Here's your reminder that 90% of your day is spent reading indicators, waiting for advantages. Price reaches resistance, the triggers remain below. I'm not going long into the line, and it pushes it all the way back to Fibonacci support, and the triggers remain above. I'm not going short into this line. Termination conditions above and below. Eventually it comes up and it retests two sets of resistance as well as a divergence high. None of the triggers are able to break, guys. This is three terminations in one spot. That's pretty powerful. And notice how ultimately the market reverses. The small get below the large. They're wide and angled in the direction of the trend. There's one of those tails that form before it hits Fibonacci support. This termination that creates the full reversal is the strong top. From a strong top, this is your highest probability trend trade opportunity. This is the one that typically wins 70 to 80%, and this is the look that very often smashes the fibs below or above it. So one more look, and I'm going to take a picture of this picture because I think this is where new users get caught. This is where experienced users get caught. We know that even with odds favorable momentum, if price reaches yellow one-to-ones and the triggers don't break, we can sit on our hands and do nothing. There's no reason to take that short, to hope that it breaks, to wish or want. Termination condition is not false. Rule number 2 is not met. There is not a clear path. Everybody's good with that, I hope. And I want you to see the reactions that happen at these decision-making points. The buyers test the water and they push up. Maybe stop out a couple sellers, get a few people out of the market. The sellers aren't done though, and they try to get back, to break that area, to do what they wanted to do, but the buyers aren't having it. And the sellers try again, and the buyers aren't having it, and the sellers try again. This is your 90%, guys. This is the 90% where you doing absolutely nothing, when there isn't momentum, when there isn't a clear path. It costs you absolutely nothing to let these two forces fight. Ultimately, you'll notice that the background is green, that the small and large get above resistance. It's behaving as support. The small are outside. I have odds favorable momentum. I have a clear path, and I have one of those potential pullbacks on the smaller, faster chart. Guys, this is the 10%. This is where the patient Nexgen user finds his highest level of profits. This is the trade that typically works 70 to 80% of the time. This is the trade that momentum loves to carry you off to that next key area, guys. This is what we're focusing on right now. The high probability trend trade that happens after a termination condition. And this is what's going to set you up for success as the new user. Is everybody good? And give me a why, because I don't want to leave anybody behind. If price reaches an area on the large chart and the triggers don't break, just do nothing. It costs you nothing to do nothing. Wait for the reaction, guys. And I'm telling you, the big wigs know where these areas are. We do too. We have a very distinct advantage over the rest of the world. Sometimes the market turns from nowhere. Sometimes I've got a clear path and it decides to go up, or I have odds favorable and a clear path and it decides to go down. I'm going to give you guys one more termination condition. This is the only small chart termination condition. This one has nothing to do with reaching areas. This has everything to do with a loss of momentum. Three divergences, three losses of momentum in the same price range may terminate the trend. It becomes more powerful when your small triggers work their way inside of the large triggers, meaning that we now have anything can happen triggers coupled with three losses of momentum. And it becomes even more powerful still. You guys that love patterns will recognize a head and shoulders pattern when the third pivot is higher than the previous from a low or lower than the previous from a high. You're going to see this look at a low or this look at a high when your large chart seems to be turning from the middle of nowhere, and this becomes a great safeguard, keeping you from trying that last long or keeping you from taking that next short. You're also going to use these three divergences when you break into that medium probability scenario. When you take a trade maybe without the best momentum, or maybe it's not coming from a good top or bottom, if I'm in the best of the best short position and three divergences print, this is my visual, get out of the trade. It may push up, it may take you out, it might go higher. So it becomes a management tool as well as you progress with the software. But initially, it's just going to keep us out of those trades. And let's see if we can find an example of where three divergences show up. 1, 2, 3 in the same price range, and it pushes up. Woo, I was busy this morning. 1, 2, 3, and it gives us a little lower push, and then the market continues back in. So you're going to see these, and they're designed to help keep you safe as well, to keep you out of the problems. So where are we at? We have strong triggers on the large chart. The large chart leads the way. It's defined the direction of the market. It's now defined the momentum of the market, and it says that I have the advantage of momentum. And it's defined the areas that we want to be aware of, and it says that I have a clear path. So now I'm going to go to rule number 3. And rule number 3, remember, is on that smaller chart, that refinement chart. This is an entry chart because the large chart led the way. Now I'm going to use a limit order. I'm going to wait for the market to come to me. And I'm going to use that limit order to enter the market at an area. Fibs, mid bands, yellow 1-to-1s. But I want them to be inside of favorable large triggers. I want those areas to be nestled inside of, whoops, what am I doing here? Sorry. My large and my synthetic that should be overlapping. They should be strong in the direction of the trend. They should be one on top of the other. Because when they're one on top of the other, this is going to give me my smallest window of opportunity, the least amount of space where the market is most likely to continue. And what this means for you guys is the smallest amount of risk. When your trigger lines, large, the smooth, and synthetic, the stepped, are one on top of the other, you're going to look for areas within. You're going to wait for them with a limit order. If they are spread out, if they are split, you know I have a picture. The large are way up here, the synthetic are way down here. We don't know where the market's going to correct to. We don't know if it's going to look for the 1-to-1s down inside of them or maybe the mid band. We're just not sure, and the risk goes up exponentially. So I want you guys to focus on trigger lines on your smaller chart, one on top of the other initially. As you grow with the software, you hear me say this a lot. As you mature with the software, as you learn more about the software, as you become a better chart reader, You may deviate. You may deviate away from one of these rules. You may deviate away from favorable large triggers, but what I'm giving you right now is the best of the best. So when your large trigger says odds favorable momentum to the upside, your large chart, when your large chart says that there's nothing in the way, this is what your small chart looks like. Your small chart should have strong triggers. Your small chart should have large and synthetic, wide and angled in the direction of the trend. And all you're doing is you're saying it's time to look for an entry. Where are my areas? Fibs, mid bands, yellow one-to-ones. These are where the market is probably going to bounce, but we want them inside of the large triggers, inside of those synthetics working together as favorable large triggers, because they're just moving averages and the market corrects itself. And when it corrects itself to an area inside of them, these areas are like a brick wall that you're throwing a tennis ball at. These are where the bounces happen. But what we need to have happen is we need that small crowd. Remember, the small chart's the small crowd. We need a group of people to fight everything going on the large chart. We need a group of people that are going to try and push it down when everything says up. And this is what gets us to our amazing entry. So when everything says up, guys, we're going to wait for a reversal bar. We're going to wait for a down bar on the small chart. And this down bar signals the beginning of the pullback, that small retracement that's counter to the underlying trend. And at the time of the down bar, you're going to look at your areas, fibs, mid bands, yellow one-to-ones, and they should be inside of favorable large triggers. So you're going to look from the highest point of support to the lowest point of support inside of favorable large triggers. And this becomes your window of opportunity where the market is most likely to continue. All you need to do is activate a limit order right at the top of it and wait for that market to swing on down. And if it comes down, you're in a long trade. You're in a long trade with the advantage of momentum. You're in a long trade with the advantage of no termination conditions on the large chart. And now you're in the long trade with the advantage of having entered where the market was most likely to continue. So the large chart said up. The large chart said odds favorable momentum. The large chart said there was nothing in the way. The small chart gives you this little reversal bar that says, guess what? The small crowd's fighting. When it happens, draw a box from the highest line of your triggers to the lowest line of your triggers. This is where we're looking for areas. This is not the window of opportunity. Your window of opportunity extends from the highest point of support, closest to price, to the lowest point of support, furthest from price. This white box is where the market is likely to continue. Your job is to do nothing more than put a limit order a tick or two above that highest point of support and wait. And the market's either going to get you or it's not. You're either going to get filled or you're not. Guys, you're not in control of that. You're only in control. The only thing you're in control of is whether or not your rules are met, whether or not you had three advantages. And this is your high probability trend trade entry, guys. This is the best of the best. And if the market comes down and hits that limit order, congratulations, you're long. But we created a window. We did not create a one line, one tick scenario. We're good, guys, but we're not that good, which means that mentally I want you to be ready to see a little negative. It's okay. You're still inside the window. If it pushes against you a tick, two ticks, four ticks, sometimes a point, it's cool because you're still where the market is most likely to continue. And then because we're so good at determining that point, we can put a protective stop outside of the window of opportunity where the market shouldn't go. And if the market comes down and it hits my stop, guys, I don't get upset. I don't get hurt. I don't get angry at the market. I remind myself that I took a trade that typically wins 70 to 80% of the time. And mathematics tells me that anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. Every 10 trades I take, I have to plan on losing 3 of them. And I never know which 3. It may be the first 3 that I take in a day. It may be the last 3 that I take in a day. But I know that I have a statistical advantage each and every time that this happens. This is a cost of doing business, guys. This is paying rent, buying supplies. This is your high probability trend trade. This is the trade that's going to teach you to read your indicators. This is the trade that's going to build confidence through the memory of success. This is the trade that lays the foundation, the groundwork for you to move forward and create a plan that suits your needs, guys. Are there any questions about the high probability trend trade? Does anybody have a question about recognizing momentum? Using the small and the large triggers, the separation between the two to identify? Does anyone have any questions about termination conditions? If price reaches one of these lines, the triggers don't break, sit on your hands. If the small and the large get through, it's broken. And then guys, these tails on the large chart, this is your historical study. This is how you're going to go back and you're going to test this and you're going to try to prove me wrong to the best of your ability. When you have odds favorable and a clear path, circle a tail. We don't circle tails. If it lines up with support or resistance inside of favorable large triggers, take that picture, guys. This is your best of the best. This is the one that you should be committing to memory. This is the setup that should be going into your spreadsheet so that recognition becomes easy. And let's go see if we can find a market that's giving us that. Man, I open a lot of stuff. So I'm looking for odds favorable momentum. And I'm looking for no terminations. I know that there was some news going on. Look at this. One-to-ones break. And they behave as resistance. Let's circle the tail. Got to scroll back a little bit. It did, Paul. The volume is on the January contract. Guys, can you give me a Y in the room if you see what's happening right here? And let me take some of the noise off of there for my newer users. Whoops. Stop it. Small's outside of the large are wide, they're down. There's one of those tails. I want you to see where it pulled back to. It didn't pull back to the large triggers and pull and go down. It didn't pull back to the synthetic triggers and pull down. It pulled back to resistance inside of favorable large triggers. And guys, your window of opportunity on this particular trade was that big. This is where Nexgen users following the high probability trend trade entered the market short. That was an easy winner. And if we scroll back, let's see what this tail looks like. I took that trade. Pulled right back to support inside of favorable large triggers. I took it all the way up to Fibonacci resistance. Guys, I trade what I teach. I really do. And then if we just roll back, let's look for the next tail with odds favorable. I wonder if this was an opportunity. That's right at the very beginning of momentum. Right to resistance, right inside of those large triggers. So guys, this is your high probability trend trade. This is your best of the best. This is the trade that typically wins more than it loses. This is your foundation. Study it. Make sure that you're comfortable with it. Ask a million questions about it. And then I'm going to give you some stuff to help you take it with even more. Michael, I'm not sure what you're asking me. That's Apex 52,390. Don't you have to get to 3 grand to qualify? So you should probably go through their rules, right? You should probably go through. I don't even know. It's a $50,000 account. You have to make 3,000 before you lose 2,500. You have to do it in 7 days, not 1 day. And then you'll qualify for their funded account, and then you'll have to do it again before the payouts come. Outstanding day. But once you are funded, Michael, you can't qualify the account in 1 day. There's a 70% rule. You have to be consistent daily, not rely on one day to be a rock star. And you are clearly a rock star today. Nice job. Cool. So just stay with the consistency, man. Get to that 7 days. Rock it out. I completely forgot what I was talking about. Oh, here we go. We're talking about a high probability trend trade checklist. Guys, print this out. Put it on your desktop. Grab your biggest, brightest crayon and make sure that you can mark yes to these as the brand new user. This defines your entry. This defines the best of the best spot where the market is likely to continue, and it gives you the conditions that must be met. Is the market coming from a good top or bottom, a termination condition that creates a full reversal? Um, if it is, mark yes. That's your highest probability trend trade ever, the absolute best of the best. If it's not, use those divergences on the small chart when you manage. Do you have odds favorable momentum on both charts? If you mark yes, and only if you mark yes, go to the next one. No termination conditions. Make it a yes. Look for your area inside of favorable large triggers. Not only is this a checklist, a way to police yourself, this is exactly what you should be writing on every chart where you take a trade. You should be writing these rules. You should be writing these advantages. You should be associating the look with the words so it becomes easy over time. I've never had anybody use this checklist and not win 70% or better. And I'm going to give you the same checklist with the visual, guys. The idea that what does a termination that looks like a full reversal or that has a full reversal? This is my strong bottom. This is what I'm looking for. Here's my momentum. That's my best look. There's those tails. That's my best look. There's those tails. This is where things start to suck. Visually, I know exactly what I'm looking for. I know exactly how to identify a termination condition, and I know exactly what it should look like when it breaks. I'm going to study this every morning. And then the window of opportunity, guys, getting into the market where it's most likely to continue. Great entries create manageable trades. Look at this every morning. Study it. Study your checklist. Print it out. Make sure that you follow it. And then finally, I'm going to give you a plan. So new users, this is your plan. We have been building a foundation for the last hour. We have been putting the pieces together for the last hour. And this plan is your stepping stone. This plan is not the end of the road. This is the beginning. This is the plan that makes you a chart reader. This is the plan that makes you confident. This is the plan that keeps you focused on the best before your brain takes over and tells you to try to catch everything. This one's designed to optimize your chances of success with the high probability trend trade. And then also that first medium probability trade when an area has the potential to break, what we call a 50-50 trade. And we call it a 50-50 trade. I don't think I said that when I was going through it. Simply because 50% of your trigger lines have broken through the area, 50% are not. It has nothing to do with your chances of success. 50% have broken, 50% have not. With odds favorable momentum, it has the potential to break. I'm going to give you the recipe for the highest chance of success with that trade. But it's going to be your simulation, your study, your feedback in class. So important. And your continuous practice, taking all those pictures, guys. You're going to create a plan that's tailored to your needs. You're going to create a plan that fits your wants, your needs, your desires based on your ability to read the charts. You will not be bound to the high probability trend trade for the remainder of your life. You will not, that won't be the only trades you take unless you're super patient and you like winning 75, 80% of the time. I don't know, seems like a good recipe for success, but most people can't do it, guys. So this is a simple plan of consistency. And if I take all the fluff off, it's like a half a page. It's simple. It's focused. It revolves around your entry first. And it starts with never fighting the large chart direction or the triggers, guys. There's no reason. There's no reason to fight the trend. There's no reason to fight momentum. It's a recipe for success, guys. It's financial suicide. Define your entry. Take 20 days and focus on entries. Take 20 days and get in at the right spot because getting in at the right spot creates manageable trades. And the same way it's mechanical and methodical that you're getting into the market, If I have this, then I look for this. If I have this, it's a flow chart. Your management for the brand new user can be just as mechanical and just as pragmatic. And this is the most straightforward approach for new users is your management plan is dependent on the entry, right? The best entry, getting in at the area inside of favorable large triggers. Your initial stop is going to go outside of the window of opportunity where the market shouldn't go. And at this point, you're sitting on your hands and doing nothing. It's either going to hit your stop, which is going to be a small managed loss, which is a normal part of a positive equity curve, or the trading gods are going to bless you with a reversal bar in the direction of your trade. And if they do, whether it's up or down, long or short, we make money both ways. You're going to reduce your risk. You're going to put your stop 2 ticks above or below that reversal bar. You're going to manage your risk before you ever manage your profits. Now, the market's either going to hit your stop, which normal part, right? It's cost of doing business, but now it's a smaller loss. Or it's going to hit your first target. Your targets are predetermined. And the first target is $100. And guys, this is a tiny little target. This is a target that isn't going to put you in a Lamborghini. This is a target that isn't going to make you the belle of the ball. This is a target that's going to create confidence through the memory of success. This is the target that's going to make you feel good about it getting hit. This is the one that's going to get you excited. It's going to let you know that absolutely money can be made in this market even though I'm brand new. This is the one that just, oh, it just makes you feel good. The dopamine kicks in, your palms stop sweating, and you're going to move your stop to break even. So now not only have you gotten paid, but now you have absolutely nothing on the table. No risk. You're playing with house money. And that break even stop's going to get hit a lot, guys, because it's a ridiculous stop. It's chum in the waters. But when you get paid and you have absolutely nothing to risk, your brain is going to be more apt to allowing you to hold for that second target. And if it hits the second target, guys, we're just trading 2 contracts as a new user. That's a $300 trade. And a $300 trade, if this is the best that you can muster each and every day, is a $1,500 week. It just paid for your Corvette. And that $1,500 week is a $6,000 month. And that just paid for your $500,000 house, which isn't a lot of house these days. But that $6,000 month becomes a $72,000 year. All from the best of the best, from being pragmatic, mechanical, methodical, from having a statistical advantage every time you pull. Turn that 2 lot into a 4 lot because now you're comfortable and consistent, and that exact same trade with the exact same result turns into a $144,000 year, and that compounding happens. And if you're doing something like Apex, and I have people that trade simple plans, but they have 10 accounts linked to it. And your $300 trade, just one trade, one market, is mirrored on 10 other accounts. And that turns into a $3,000 day, right? And that turns into a $15,000 week. And that turns into a $60,000 month, which I think that translates into somewhere around 1.4 million. Not bad, right? From the same trade, just using a multiplier. So let's focus. Well, and I like the woo, Michael, but here's the deal. You ready? Here's your warning. Here's the old witch lady coming out of the shadows. Here's Aladdin telling you that everything has another side. Focus on the process. Focus on having an advantage. Focus on taking the right trades. Don't worry about the money, guys. The money will come. It always does. Focus on having the advantage. Look how resistance breaks and behaves as support. Look how resistance breaks and behaves as support. Guys, this happens all the time. All you have to do is get the repetitions so that you can do it. Look at how price reaches Fibonacci resistance. None of the trigger lines break. Look at the bounce that happens off of it. Every day, guys, termination conditions for the win. Every day. Support breaks, behaves as resistance. Support breaks, it's currently behaving as resistance. Pretty cool, right? This is it, guys. This is my first hour every day. The first hour is where we lay the foundation. The first hour is where you get a little bit smarter and learn how to read your indicators. And now the second hour is where you get a private session every time you post a chart. Every time you drop a chart into the room, you and I are going to have a conversation about it. So to have the best conversation, what do I need from you? I need both charts. I need you to show me what you did on the large chart and the small chart. Because what I don't want to have happen is I don't want you getting lucky. I don't want you setting yourself up for long-term failure. I want you setting yourself up for long-term success. So if you really want my feedback, show me both charts. If you don't want my feedback, if you just want to show everyone in the room that you're kind of a badass using the methodology, I don't know, type show off post, right? But that's an educational. It's because you're a horrible person and probably did something in your past, Michael, that, no, I'm just kidding. Wouldn't that be horrible? We'd all have stuff crashing. Um, there's a couple different reasons that NinjaTrader crashes. Um, and some of them make sense and some of them don't. My brother has programmers working on it, trying to figure it out right now. But there's things that you can do. When you're in a trade, leave it alone. Don't activate an order in between orders. Um, when it's calculating, don't scroll all over the place with it. Let it finish doing what it's doing. Um, type on type on your pictures rather than on the chart. Little things like that help a lot. Having good memory, strong computer, fast internet helps as well. It happens from time to time. I don't get a whole lot of problems with it, to be honest with you. But when you're annotating charts, guys, the whole idea of this classroom is feedback, telling you what you did right and wrong, helping you get to where you want to be. Show me both charts. Show me the large chart and the small chart. Let me see the advantages in place. Write your rules on the chart. I don't care what kind of trade you're taking. I don't judge you on the trades you take. I judge you on your ability to tell me the advantages that got you in. Tell me if you had odds favorable momentum. Point an arrow. Tell me if the path was clear. And even more so, if the path wasn't clear, mention it. I know that I traded into a fib, but I made the choice to do so because. And man, I'll tell you right now, guys, I am all about celebrating victories. I'm all about looking for the positive. We'll find reasons that your medium probability trade had advantages. We'll talk about ways to management. We'll talk about what you did great. We'll talk about what you could do better. But every time you post this picture in the room, it's a private session for you. Um, Show me your timestamps and your price so that I can figure out the correlation on the two. Did you get in here? That looks pretty good. And then one thing you can do that not only helps me, but it helps you guys. If you go to your right chart and you or your small chart and you right click, go to data series, down at the very bottom, it'll allow you to plot executions. If you put text and marker, it lets me see exactly where you get in and it lets me see exactly where you get out. Because what happens with new users, you know what, let me go to this one. What happens with new users, very often, totally normal part of it, is you'll write that you waited for the pullback to support, but I see you getting in at the top of this bar that scared the ever-loving crap out of you. And this is pretty normal. I think everybody does it. I've done it. But what happens is when you jump in, not at the areas, guys, your stop is still way down here. And look at the amount of risk that you place on a trade. So if I see this, we can talk about it. We can help develop that trust. The other side of that is look at how small it is to get to that fib. So not only do you have to sit through all the heartburn, you're just not in a position to make a lot of money. So show me where you got in. Show me where you got out. Because every great trade, guys, every entry creates a management opportunity. And that's what the third page is for. And that's what your second page is for. Management things. When to not move stops, right? When everything is screaming in the direction of the trade, when the path is clear, when everything is wonderful, don't move your stops. Trust the large chart. Make them come and get you. So this becomes a management section, every great entry. I've got a lot of management things going on here that you can take a look at as well. But if you show me entries and exits, guys, I'm going to help you. I'm going to help you get to where you want to be. I'm going to help you find that better entry. I'm going to help you find that more logical exit. And this is what I do. So, guys, that's the first hour and 11 minutes. It's the same first hour and 11 minutes every day. You have a plan, you have a checklist. My second hour, we're going to look at your charts. But before I do that, I'm going to go stretch my legs because I don't think anybody should sit in a chair for more than an hour. Can't be good for you. So I'm going to take 5 minutes, guys. Look at that termination condition doing its job. Pretty cool. When I come back, we're going to look at your charts. We're going to talk about the advantages. Doesn't matter what kind of trade it is. Does not matter. I don't care what you did. We're going to talk about momentum and a clear path in an entry area on every one of them. Every one of them. Because this is an educational class. This isn't a show off class. If all you want to do is show off, print out your trade, send it to your grandmother. She'll put it on a refrigerator. So they say, sitting is the new smoking. You know what, Phil? Because it's so bad on a body sitting around doing nothing. Is that why? I don't disagree with that. Inactivity is a killer. Unless you have my spine, Paul, and then standing desks are not so good, which is why I have to get up and walk a lot because if I stand, it hurts more than sitting. I've got a super fancy gaming chair that gives me all the support I need. The Novak back. It's a horrible, horrible thing. Guys, I'll be back in 5 minutes. Do you really, Phil? You're what we in the business call an overachiever. Nice stuff. I'll be back in 5, guys. We'll start talking about all your great charts. See you in a minute. All right, guys, I'm back, and before I spend any time looking at charts, is there anybody in the room that just doesn't believe in termination conditions yet? Is there anyone in the room that doesn't feel as though there's a ginormous advantage for you by being able to recognize these areas, being able to see where the market is likely to stop, being able to understand where the market is likely to go? Because, guys, I'm telling you right now, that is one of the biggest parts of the magic of what we do is being able to call these turning points. You know, buy low, sell high. Guys, you know where high and low are. Pretty outstanding. So I'm going to scroll to the top of the room, guys, and I'm going to start clicking on some pictures. We're going to see what you guys did. We're going to see what's happening in the wonderful world of you. And Gary got us going here. And I love this because this is a termination that creates a full reversal. And this full reversal gives odds favorable momentum. And this odds favorable momentum provided him a clear path to get to the next area. And Gary, you're in on the first one, out at trouble, get back in, take it to trouble. Nice trading, Gary. And then Gary, one more time, 50-50 trade at news. Yeah, no reason to do it at news. And then I caught this one after news. And that was a good one. And the stuff that John Novak teaches is the one that gets you into this one, guys. It's not a high probability trend trade. You should knock on his door and have him teach you. All right, Cav, let's see what you did. Haha. Cav says, everything is screaming down, Novak. And I get below the area, and I get a pullback. And it's just a momentum trade, and you took it to the next one. Cav, this is absolutely beautiful. And I think that the key here, guys, is that support became resistance, right? It made it easy. You're like, everything says down. I've cleared the area, and if it pulls back, that's my spot. And you're in at 83, so you're in low. So Cav, you didn't let it break the one-to-ones for the momentum style, which meant that you had to ride out a little bit, but great stop placement where the market shouldn't go makes it easy for you to take it down here. Um, and if you had gotten in at 95 or so, just below resistance, 3 ticks below, a little less risk. Great trade though, Cav. Nicely done. Everything said down and the market went down. And then Allen, 50-50, not a good bottom, not a termination that created the full reversal. And it just didn't make it, huh? Just missed it, not your money. That's a good look, no divergence. I mean, you were ready for it, just didn't get you. It's a good look though, Allen. Nice attempt. Sometimes it's just not your money. And then Cav, momentum again, let it break, pull back, take it to the next area. You're just going to keep going until it says no. I love that. Way to catch it. Jose stopped out at reversal bar marker. You took the entry, same one Cav took. Which reversal bar marker did you get stopped out at? I guess I'm trying to figure out your reversal bar marker idea because the large chart reversal bar marker never happened. 86, 86, and you're trading directly into the fib without momentum. And I think getting to the other side, getting beyond that trouble is advantageous because you don't have odds favorable momentum, right? So we're calling it a momentum trade. And guys, this is pretty common as people try to catch momentum trades. You're calling it a momentum trade, but there's not momentum yet. And you've got a giant fib at 87, and the market doesn't break it. None of the triggers are getting through it, right? So the area is not broken. The momentum isn't there. This is where, gosh, let it get to the other side, right? Let it get to the other side and look for your opportunity. It's going to create a huge advantage. But momentum trades without momentum are less likely to work. Trend trades without a trend are less likely to work. And then I could teach a class on this one. Why not use the mid band though? Cav, did it almost hit it and start back down and you jumped in? Yeah, okay. Normal, right? That's a normal part of it. But you knew where your stop had to go. Beautiful. The rules worked. You knew the rules, which meant that your stop was up here. Beautiful trading this morning, Cav. Killing it. You're trading with the clear path. You're trading with the momentum, and it looks like it's making your life pretty easy. And then Phil, beautiful little pullback. Money, money. It's just a trend trade short. Anything can happen, but strongly below the area. All triggers below the resistance with a clear path to the target. Enter the limit, one tick shy of the fib. Guys, this is the perfectly annotated chart too. Phil, outstanding. Large chart said you had a clear path, not the best momentum. Room to the target. Small chart gave you the entry area. So you forfeited the best of the best momentum, but it's a strongly trending market. The perfect entry, virtually no risk. Gosh, that's outstanding, Phil. Everything said down and the path was clear, and sure enough. Checklist. Market coming from a good bottom. Odds favorable momentum. No termination conditions. I like it. How'd you pick your entry? Below the midband. Is there another chart, Cav? You using a market flow chart or something that I can't see? Experience. That works. I think that stab back right there is the official entry, per how John Novak teaches it. And then you're like, it's still right. It's still the right trade because when a termination condition's that pretty, it's a great opportunity. I don't typically take these trades because I always struggle to figure out where the hell to put my stop. Yeah, strong triggers to the upside. I love it. It's a beautiful look, and it is. It's experience. It's chart reading. Nicely done, Cav. Cav, you get the microphone tomorrow. And then Edwin, 13-2, said down. 50-50 trade, no divergence, perfect entry. Used all the hopium in too early, took lots of heat, but the momentum paid off. I like it. And Ed's not here. Guys, I want to remind you that if you post a chart in the room and you have to go somewhere, just go, hey Mark, I got a split. Will you open my chart? Will you give me some feedback? I'll always do it. Always do it. Well, I'll stop what I'm doing and make sure you get your feedback. Let's see, Ron, everything says up with momentum, you take a chunk. Everything says up with momentum, you take a chunk. And that is 2.75, just under 3 points each on a 4 lot. 1 lot just messing around. Base hits, guys. Base hits pay the bills. Gino worked on good entries. Looks like things would be less than perfect to get into some of these. Yeah, I would say so. I don't know what your large chart's doing, Gino. Hell, I'm not even sure what market this is. Maybe the NASDAQ? Um, Man, if you wanted to give me a little more information, I could probably help you a little more than I am right now. Show me those two charts. The first sentence on the trend trade checklist, that's the foundation to all good trades. All good trades, Cav. Strong tops and bottoms. It's the NASDAQ, Gino. Are you looking for momentum style trades or trend trades? Both? So, Gino, give me both, man. Are you comfortable taking pictures of both? I had somebody once, and I don't think it was you. Let me open up my TechSmith real quick. And this will just be a cool little something for everybody, guys. This isn't just for Gino. So when you have two charts, right? But what are your entry rules? So Gino, and I'm not picking on you, right? Because that's not cool. What got you in right here in the middle of nowhere? What got you in right here without an area, right? So what's getting you in? What are the conditions on the large chart? What's making you feel like this entry makes sense? And then why not this one? And why not this one? And why not this one, right? And the idea and the reason that I'm doing this, Gino, is because if you give me all of the information, and you do that, so when your TechSmith comes up, and this isn't just Gino, guys, this is everybody. When I click this giant capture button, if I hover over one chart, it only gives me one chart, guys, and I don't know what's going on, right? Did I have odds favorable momentum? Did I have a clear path? Hell, I don't know. All I know is that the smaller, faster chart is right there. But if I click and drag from top to bottom, do those timestamps, do those prices where I can see everything, now what I can do is I can say, hey, I went short right here. And right here happens to be right here, right? But it was a 50-50 and one, two, three areas weren't broken. And now I can see what's going on because what I might be able to do for you is say, hey, let's talk about how many areas didn't break, right? And let's talk about how much work had to be done for this market to continue down. With this many areas, that's a lot of decision making. Maybe waiting for a reversal bar, maybe waiting for something because your window of opportunity extends from the mid band all the way to 18. So from 18 to 21, that's 3 points. And then you've got to be all the way up here at 22. It's like a 4 point window. So we can have that great conversation, guys, and we can make sure that I'm giving you the absolute best information, the best feedback. And more than anything, it's a consistency thing because, Gino, if you study your picture tomorrow morning, what does it tell you? Right? How are you going to be better tomorrow looking at this picture? You're not because you got to go look right now to figure out what the hell you were doing. So let's make it consistent so that it's repeatable, so that you can take these great trades, and they're probably great trades, but I want to make sure that you can do it every day. Every time it sets up, you don't miss it because you know that it provides a statistical advantage. Holy Michael, that's not easy to read. Let me see if I can make it a little smaller. So the same thing, Michael, guys, I want you to do this. I had a professor in college. Why'd you do what you did? Michael, why did you go short 178 times? Why did you take profits 178 times? Right? What got you in? Where did you get in? Where was your risk? Where was your stop? This is an awesome hey look at me post, right? But Michael, what can I tell you about it? I can tell you that it was a downtrend, absolutely. But if I could read this, wouldn't it be awesome to say, Michael, check it out. You could have gotten in right here and gotten out down here and eliminated $173 worth of commissions. And I love it. Everything says down and you went down, and you're scalping for some reason, but it doesn't, you got stopped out. Okay. So now we got to talk about where are your stops? Why are they there? What are we doing? Um, Gosh, I love having you guys in the room, but I can't do anything with this. All I can say is, hey, good job. You went short when everything said short. And I know it worked out because you're showing off again. Look at what I did all the way down. But Michael, could you do this tomorrow in the same scenario? Could you repeat this? Was there a statistical advantage? Is this the kind of trading that's going to get you long-term success? Or is this the kind of trading where you were seat of your pants? And I'm not saying that it isn't something that can be repeated, but there's zero value in this from an educational standpoint. Um, And that's what I want for you guys. I want you to be able to repeat things over and over and over. I want you to be able to do the same thing over. Great question, Ace J. The numbers have absolutely no bearing on the quality of the divergence. Um, Divergence is very much like pregnancy. It either is or it is not. Um, This negative number is a byproduct of the calculations that happen behind the scenes. And when we're looking for divergence, Ace, it's that magenta line that says that the sellers stole the momentum from the buyers. So whether it's 14, 4,000, it doesn't matter. Um, I used to do that. I used to try to assign a weight to it, and my brother's like, "Yeah, don't. You'll drive yourself nuts." Great question, man. Great question. Because that's one everybody wonders, right? Oh, Cav again. Market's coming from a good top, perfect entry, rock star exit. So guys, if you have a picture that looks like this, if you took this trade should go into your spreadsheet. This should be the kind of trade that you try to repeat every day. And Cav, I don't know if you're in the Hall of Fame, but you should be. Because it's a termination that creates a full reversal, that gives odds favorable momentum, the perfect entry, and a beautiful exit. Outstanding, Cav. Appreciate that. Paul, everything says up. The path is clear. You're looking for the pullback to support. Fingers crossed, brother. Fingers crossed. Ah, Paul, are we that close to Thanksgiving? That's next week, isn't it? Oh, shoot. Well, dude, have fun golfing in the desert. I'm a little jealous. I've only played one round since I've been back in Dallas. I need to get that going again next week. It's been busy. I am tonight, kind of a cool thing. A buddy of mine owns a security company here in town. Um, and they did like the American Country Music Awards, stuff like that. He does big private security gigs. He's doing one tonight for Jordan Spieth, doing a fundraiser at Top Golf Country Western concert for Jordan Spieth, and he's like, "Dude, I need a couple extra bodies to run it, so I'm gonna go work security for my buddy's company to help out." So I'm gonna be like practically in the PGA. So you guys look for me on TV. It's pretty cool. I've got cool friends. And then who is this? This was Dwight, right? Dwight, odds favorable, 50-50 from a good top, no divergence. And it just didn't work out. Dude, it's a great look. So, Dwight, the only thing about this, one, two, three areas. Three areas not broken. It's a pretty good gap back to the large triggers. I get nervous I don't get nervous, but I become leery of 50-50 trades. Um, if you eliminated this fib, Dwight, it's cool. But look at the space. You're trying to get through 2.5 points gap, and you're hoping that all of them break. Does that make sense for you guys looking for 50-50s? Um, that's a lot of areas. That's a huge range that you're hoping breaks. And it's the best look, without a doubt. Um, but I start to get a little suspicious when there's such a huge range that I'm hoping to break. And then, Paul, you're like, come on, come get me. Is that gold? Gold. Temperamental, man, temperamental. And then Ace, let's see what you did. First trade of the day, got lucky, all rules not met. Right on. So why did you do what you did? And guys, sometimes luck is the world's way of telling us that we did something kind of kick-ass. So you had the best top ever, right? What a great looking termination. And the market screams down, and it really does smash through the areas, but it doesn't do it. And then we get that pullback, that ugly, right? Notice that the large triggers never blink, Ace. Large triggers never turn. They continue down. I like that. So if this one doesn't work, but everything still says down, it looks like you got in on the close on the correct side of the small triggers. Is that right? It's brilliant. Did you get lucky or is it a great chart read? Because termination pushes back up, right? Large triggers don't blink. Guys, I want you to get in the habit of seeing this. Large triggers don't follow. It almost tests resistance. Large triggers don't follow. They keep going down. Small triggers don't really break above the large triggers. You don't have an area to trade from, so if you're a little patient and you wait for the reversal bar, it at least gives you a fighting chance, right? And then when you get here, Ace, you can decide. Notice that your large triggers are still below the synthetic triggers. The synthetic triggers are still down. This is an outstanding chart read. And this is one of those pictures where you can go back and start studying patterns. Because this may be a great trade. This may not have been luck at all. Does that make sense? This right here, the reaction on the push-up, it really tells a story. And it's hard to notice that in the beginning as a brand new user. It really is. It's difficult. Yeah, that's a good one. This is the stuff that my brother helps me with. Identifying these right here. And it all starts with, like Cav said, it starts with a good top, right? So here we go again. There's your good top. There's your push. Closes the gap all the way back to the large triggers, right? That huge gap says don't go short, but when it closes the gap, don't you get a reversal bar? A little bit of confirmation on the correct side of everything when this never said anything but down. Does that make sense? It's similar. It's not the same. But it closes the gap, right? It does everything it's supposed to do. You can be a little patient. Take that close on the correct side, and then at least it creates a manageable trade. Your risk is established, and that's next level, guys. That's going to the next level. Weak triggers and divergence, probably going to push higher, but it's pushing higher right into resistance. It's putting right into one-to-ones. Doesn't mean that there is a short trade, but maybe it kept you out of that short trade without the advantage of momentum, without having an area inside of favorable large triggers. And now you have to see what the reaction is. What's going to happen here? I can't go long because none of my triggers are broken, and I can't go short because, good Lord, I'm not fighting momentum. Everything becomes a chart read, guys. Everything becomes an opportunity for you to just go back and talk about advantages. I have momentum, right? I don't have a clear path. I do have areas inside of favorable large triggers. I also have divergence. Some people, it fits their plan. Some people say because of this divergence, I don't care for it. Some people say a second lower divergence, I love the short, but since it's not perfect, maybe I'll wait for a reversal bar for confirmation. Maybe I'll put a sell stop right here, and I'll say, let me get it moving in the direction of the trade. Let me manage my risk a little bit because it may not go from here. It's not perfect. I do have a loss of momentum. Do you see how you can take a very basic entry and begin to expand it into more, guys? You can take a very simple concept and you can say, if I never get a reversal bar here, well, shoot, I'm not, well, that happened fast. And now, if I get a second divergence from the trouble spot, maybe I take it. Look at that slippage. Whew, that was big. That becomes a tough trade, right? How do you manage a trade with that much slippage? I don't know. But every one of my indicators says down. My smalls are down, my large are down, my synthetic are down, my momentum's down, my large triggers are down. It's still not a high probability trend trade. But that is one way that you can do it. Now you say, well, if divergence prints, I'll know by the third bar. I'll put a stop 2 ticks above my reversal bar marker. But that is an example of slippage creating a very difficult scenario. We got slipped 2 points getting into this trade. Does that make sense? Everybody see what happened there? I waited for confirmation. My confirmation got expensive with slippage. Doesn't guarantee a winner, but it certainly is going to guarantee me a bigger loser in the event that this one doesn't work out. But I have an awful lot of momentum. Every trigger line's down. I just don't know. Some of you will stay in it, some of you won't. Waiting for every trigger line to agree, potentially. Look at that one. Momentum is still winning to the upside. Well, guys, we got through all your pictures. What do you guys want to talk about? Hard to go break even on a trade with such a low entry. If we'd gotten in at the spot, that would have been our $100 profit. I don't know that I would keep this trade, personally. That's a lot of risk for me. I might say if it creates an up bar, I'll get out. At least then it becomes manageable. We'll see if momentum wins. Sometimes it does. Without a clear path, it's hard. Here's crude oil coming from the term. Gap theory filled. What do you guys want to talk about? What has been just all over your mind? Skip that one. Yep, me too, Daryl. It doesn't fit my rules either. But I was just showing that when it's not perfect and you're tempted, wait for confirmation. Wait for a reversal bar. That one spiked 2.5 points. Like, it's okay to do that, right? You don't have to be first. At least then the risk is managed. And John talked a lot about that for a while. As if you find yourself getting in early, if you find yourself getting into trades early a lot, one of the things that you can do to kind of help mitigate that is instead of getting in on the way up, get in on the reversal bar, right? I'm always jumping in early. I'm always getting in early. And guys, these are the things that I see. Fearful entries, right? Fear of missing out entries. John's like, well, if you keep getting in down here, afraid that it's going to miss you, wait for the reversal bar. And if you don't get it, don't take the trade, right? Or if it's not perfect, wait for the reversal bar. And if you don't get the reversal bar, don't take the trade. And there's a lot of things that you'll do as you grow outside of the very basic plan that patterns are going to repeat themselves, that you're going to notice over and over again. Um, but like Cav, you get so many bonus points today. If you let everything come from a termination that creates a full reversal, you'll be amazed at just how much easier it gets, right? And this good top, it's done its job, guys. It's done. S&P's struggling today, isn't it? You guys notice how there's no follow through? 50-50 trades aren't working on the S&P. Give me a Y if you see that. This is one of the times where the rear view mirror is appropriate. 50-50 failed. 50-50 failed. That's a termination to the tick. That's a termination. 50-50 failed. Trigger lines weren't right. Nothing to do except think about shorts. 50-50 failed. So if you see 7 50-50s in a row fail, what does that mean? That means that the buyers and sellers are mad as hell at each other and they can't figure out what they're going to do. They don't know. Are the buyers going to win or the sellers going to win? Nobody knows, right? This becomes an opportunity for you to relax a little bit. Means you probably hit your daily drawdown sometimes, huh? Initially, Phil, that's exactly what it meant for me. But now it doesn't, because now I have this plan that says if I reach a divergence low and none of my trigger lines break, this isn't my short no matter what happens. And if a 50-50 prints with a gap to the large triggers, this isn't my short no matter what happens. And I have to take an ass kicking a lot to do it. Weakened triggers and divergence, giving away momentum, right? I do have a clear path. Maybe I'll wait for that reversal bar. It's not perfect. Large triggers are remaining down. It's still pushing down. There's your reversal bar if you're trying to go with the large trigger direction, but still, why fight? 7 out of 10 50-50 trades usually go against you. You think so, Dwight? You have 100 trades to validate and verify? Because I feel like, call me crazy, I feel as though, based on my own study, that if you follow the KISS plan for 50-50s, if you follow the best of the best, and notice that it starts with one area not broken, not three. So Dwight, that takes yours out of the equation. And it says no divergence. So that takes, I think Phil said that one wasn't his, right? From a good top or bottom, it takes a lot of those 7 out of the equation. True story, guys. This plan is some boring stuff. Making money is boring, guys. It's like someone told me once, I think it was Paul told me, great golf is boring to watch, right? It's not hooking it around a tree every time or amazing bunker play. It's staying out of the trouble so that you can score. Um, so if you're losing 7 out of 10, why not incorporate this? And Snorri told me that good golf is not at all boring. And I know that's what he's typing, boring but beautiful. I knew you were coming with that because I remember the conversation from last time. Um, my brother used to say if Elon Musk called you today and said, hey, Dwight, I need you to sit in a room for 7 hours. And you're going to push a button 5 or 6 times during that 7 hours, but only when these conditions are met. And I'm going to pay you $150,000 a year to do it. Is there anyone in this room that wouldn't take that job? I'd take it. But you want to know the truth? Is that if I took that job and treated it the same way I treated my business, I'd be unemployed within the first month, right? If I push buttons all willy-nilly the way I do as a trader, he'd fire me instantly. And I think that I always like that analogy. Gino, amen. And it doesn't matter if you play alone or with a partner. I'm gonna have to edit that out. Um, but doing it wonderfully, guys, isn't this exciting roller coaster that we all think it is. It's not the movie Wall Street, right? It's not Michael Douglas yelling and screaming and everything going crazy. It's you sitting in front of a computer and waiting and waiting and waiting. And you know what I do? MSN games. I play Scrabble when I'm waiting for trades. True story. I play Scrabble when I'm waiting for trades, or I draw a picture. I do anything other than sit there and stare and try to fabricate because I will. I'll make some stuff up, guys. Um, most people will. And then, Phil, did you see it again? Did you guys see it again? 50-50 trade fails, right? Divergences say it's problematic. And when it reaches resistance, the large triggers didn't blink. And there was that reversal bar, Phil. You may be onto something, you think? Is it possible that the large chart does lead the way? He said knowingly. All right, guys, I'm going to take 5 minutes again. I'm going to go stretch my legs a little bit. My shoulder's sick of holding on to this mouse pad. I'm going to leave you guys with the S&P. We'll see what it does. When I come back, I want you guys to do me a favor. Who's in here that's still relatively new? Craig, do me a favor. Ask a question. DJ, ask a question, right? Even if you're not that new. Phil, Alinsky, Daryl, Steve B, Freddie, ask a question. Um, I don't care what. Try and stump me. It'll be fun. And if I don't have the answer, then I'm going to go find it, and it's just going to get better. So I'm going to take 5 minutes. Post your questions in the room, and let's talk about them. Let's go back and find examples of them, and let's look if we can come to a good answer. I'll be back in just a second, guys. Let's go through. Dwight, let's see what you did, bud. All right. You did enter at the area inside of favorable large triggers, didn't you? Says so right on your chart. What were the conditions on the large chart? Did you have odds favorable momentum? Looks like you did. Did you have a clear path? I'm inclined to say no. What do you think, Dwight? You guys hear me? So it's a 50-50, right? It's not a clear path. Would you agree with that? Awesome. One divergence. Whoops. One divergence. Maybe not a killer. You're definitely coming from a good top, right? One divergence, maybe not a killer. Rock star entry. And that's the one. So outstanding. Two divergences pushes it higher. Great job managing your trade. It's a medium probability trade. You managed it assertively. Nicely done. And I'm telling you, 2 points on a 10 lot, that's not a bad couple minutes of work, is it? Nice trading. You took a medium probability trade. You took the perfect entry. It created the opportunity for you to make money on the trade. Beautiful job. Thank you for sharing that. And then DJ, you said you had a question. Please pop it in the room. Cav, divergence prints. The immediate momentum is up. You let the large triggers roll and take the pullback. Putting a lot of faith in those synthetic triggers. Works out nicely. This is your trade, Cav. That's the one. That's 2 or 3 of those today now. When those small triggers turn up on the large chart, especially on the NASDAQ, and I love this look. Your large triggers are up, right? They're getting to the business side. It's definitely patience. Definitely patience. Larger up, synthetic are down. That's no momentum. Guys, that's an ugly look on the S&P. That is not an advantageous look. However, on crude oil, termination, full reversal, odds favorable. There's a tail, not the best look. There's a tail, that's pretty. There's a tail, not so bad. And it all started with a termination, full reversal. 50-50 on the NASDAQ. There's the second half of Cav's look. Stream pause message on my screen says you minimized it. Okay, hold on 1 second. I'm just going to reload it. I'm going to stop it and then start it back up. On my end, it doesn't say anything. There we go. Is that back? Weird. Yeah, Discord's full of shenanigans, guys. I didn't pause it, but I'm glad that we're back. Cool. Bobby T. Everything says down. Everything is screaming. You take the perfect entry and an outstanding exit right at fibs. No question, DJ? Oh. For right now? Okay. Bobby, nice trade. Beautiful. Telling you guys, I get excited when I see you guys doing great things with the software. I get excited when I see people growing, when I see people getting better at it. Look at those triggers. Look at the look over here. Feels like a guess. Feels like a, doesn't feel like an advantage there. I don't have odds favorable momentum. I certainly don't have favorable large triggers. If you go back to that real simple, it takes momentum, a clear path, and an entry area. 2 out of 3 are gone. What's that mean to us as traders? It means that we've given away 2 things that make trades easy. And then the trade becomes not easy. The hard part is just it's developing that trust, right? It's developing that trust in the methodology. It's developing that trust in your ability to read the indicators. It's making sure that if you have a question, you're asking a question, right? Those of you that have been here forever have seen this a million times. But to minimize your learning curve, how do we do that? Post your pictures in the class, guys. Every trade, win, lose, or draw. I have never in my life thought, oh my gosh, not another one, Cav. Bobby T, stop posting me rules-based trades. You're making everybody too smart. Michael, seriously. Another one? Dude. Never happened. Guys, I want to see them. I want to see what you're thinking. I want to see those annotations. I want to see what makes you guys tick. Because if you're ticking a little off, I want to help. So post everything in the class, every win, every loss, every break even. And if you win and the rules are wrong, you may have a short-term victory, but a long-term failure, right? And that hurts people's feelings when I tell them that. When I say, hey, you got lucky. Or, hey, can you repeat this? Can you do this again? Is this something that worked because of the advantages, or is this something where hope got you to where you want to be, right? And maybe it's one of those ones. Maybe it's one of those ones like Phil posted earlier, and Phil goes, "Hey, I got lucky." Let me see if I can find that picture. But because Phil posted that and he put it in the room, we actually had a pretty outstanding conversation about his trade. And we got to analyze it, and we got to chart read it, and we got to look at it, right? Up all night to get lucky. What do they say? Luck is where preparation meets execute. I don't remember what that old saying is. Luck is when preparation meets something. Um, oh, do it, DJ. Opportunity. Thank you, Jose. Thank you, Phil. I knew I'd heard it somewhere. And I'm telling you guys, I say this so many times, and I ask you to do it the right way because I'm telling you that I did what you did. If you're not posting, I did what you did. I didn't have the benefit of Apex back when I did it, though. So I didn't post in the room, and I never asked any questions, and I never received feedback from my brother. Um, I never used the spreadsheet to recognize the patterns to get good at it. I didn't give myself time to practice, and I blew out 5 grand in about 22 trades over the course of 2 hours, instantly. Boom. And back at that point in my life, I didn't have 5 grand to blow out. It wasn't pretty. So this class came to be, guys. This room came to be because I know without a doubt that this works because this is what got me out of my challenges and into teaching you guys how to avoid the same challenges. So short-term victories, long-term failures, you have to know the difference. And to be sure, you need the feedback, guys. I am the warm, fuzzy Novak, without a doubt. I love my brother. He's a little more abrupt than I am in his coaching, which is good. It works for me. Doesn't work for everybody. But if you're on simulator, guys, you're participating in class, you can't lose money. It's impossible to lose money. So if you're studying a new concept, maybe you're already live, but you're adding a trade. Trade it on simulator. Get feedback. Let's work through it together. I'm pretty sure there's nothing that I haven't seen. And if I haven't seen it, all you have to do is annotate the chart and tell me what you did. I'll hold you accountable. He pulls no punches at all. Sometimes he adds a couple just because it makes him smile. But I'll tell you what, he's brilliant. He is brilliant. He's my coach. Every morning, guys. True story. Every morning. I'll show you. This is my Skype. These are the pictures that John and I go back and forth on all day. These are the coaching. These are the pictures. These are the patterns. All day. This is my coach, guys. And I'm sure some days he's like, dude, Mark, stop. But this is what we do every day. He learns from me and I learn from him. I do a lot more learning from him. But we share pictures between one another more than you guys. Every picture posted in this room today is not as half the pictures that John and I give to each other for feedback. So use the pictures, guys. Use the idea that the pictures are going to get you to where you want to be. The pictures are going to create repetition. The pictures are going to create recognition. The pictures are going to really make it so that the looks become easy. Um, Embrace it. Use market replay. There's a gentleman, he's not in here. He's gone golfing for the week. But when he started with Nexgen, every day, I kid you not, every day, my class started. I used to teach the 101 class in the afternoons. With no less than 15 pictures from him from Market Replay, 15 annotated charts asking questions. This is what I did. This is what I saw. This was my entry. This was my exit. How can I do it better? And I'll tell you, he did that over and over. And he was one of the first from my group to get funded on Apex um, because he followed that path. So use market replay, take pictures, and do it every day until you're taking the correct trades, right? Don't give yourself a time limit. Don't say, I'm going to be making money in a week, because when you don't, you get frustrated and you try and fabricate. Say, I'm just going to keep doing this until I'm taking the correct trades, because the correct trades win more than they lose. The correct trades create a statistical advantage. So if you're not winning more than you're winning more than you're losing, then you have to back up a little bit. You have to say to yourself, what's changed? What am I doing that has my win percentage down? And maybe you have to go back and you have to resort to simplicity to get you to where you want to be. Guys, this is what the class is for. It's the same class every day. The only way it changes is if you ask questions. Otherwise, I ramble, very much like I'm rambling right now. Um, but this is your path. Same path that's been true. If you go to Traders Chat and you see Janesh and Siva, and you see Mike, guys, I'm telling you, yeah, geese. Thanks, Phil. Oh, geez. All right. Guys, I'm going to ramble if you don't give me stuff. Termination for the win. Again, termination for the win. Big blue fib, no triggers through. Who went short? Is anyone going to admit it? You guys want to know a true story? That was my short in the beginning. That's where I went short. And then I'd get run over and I wouldn't post it in the room and I would just think that the market sucked. And then I started taking that short and I posted in the room and John Novak would say, all right, Mark, this is the fifth time this week I've seen you trade into a termination condition. So we've recognized your pattern. You don't believe that these lines are ever going to hold. And how much money are you going to lose into them before you stop doing it? And I'm telling you guys, it was the biggest aha moment for me ever when I got that bit of coaching. Because what I started doing is I started looking at my chart because I knew my pattern. I knew my pattern was termination conditions. Before I ever looked for momentum, before I ever looked for anything, I looked to see if there was a termination, and I made this my study, and I filled up the termination section on my spreadsheet like 100 times so that I could recognize it. So that's the process. Every time straight into a term. Why do you suppose that is? Is it hope? Is it the fear of missing out? Right? I don't know. It can be anything for any of us. You know what helped me a lot, DJ? And see, I like it when you guys share this because I get to kind of share what I've done. Is I take my 13.2, right? I take my large chart and let's make it readable, but this is the day. And I'll do it on this one because it's easier. And I'm going to take a picture of the day. And I want you to see, starting from midnight, that was a termination condition, right? That was a 50-50. That was a 50-50. That was a 50-50. That was a term. That was a term. That was a 50-50. That was a term. That was a term. That was a term, right? How many times does it bounce off of these? How many times do these not clear path? And what I had to do, hard-headed, yeah, you and me both, DJ, is I would do this. 50-50 and terms are taking my money. How do I fix it, right? And then you got to commit to fixing it. You got to commit to not trading into them. Say, okay, I'm going to start with this. I'm still going to take every 50-50 I see because I know that I'm worried about missing out, right? But this is what I'm going to do is I'm going to commit. And so DJ, we're not looking for trades anymore. We're not looking for trades. What we're looking for is termination conditions. We're looking to make sure that we haven't reached an area. And that's going to be the first thing always. I'm going to look for the termination and I'm going to take a picture and I'm going to type it out. This is a termination condition. And then you're just going to have to bite your fingernails and hope that you don't take the trade. And here the path is clear, right? It has two divergences, but it takes it right to resistance and it's continuing down. Everybody's fixable. Nobody's completely broken. There's the termination again. And then once again, term, 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 termination at the top, termination at the bottom, termination, termination starts to move. Just scroll back. This one broke, but with odds favorable momentum, right? Terminations everywhere, not getting caught in it. But I think once you recognize your patterns, three divergences in the same location, coming from a termination, just adding fuel to the fire. But once you begin to recognize your patterns, what am I doing every day? Mine was terminations, just like most of you. Some people, they have the perfect trades and they get in right here on the fluctuation on the down bar. We see a lot of this, right? I think it's going to go short. Let me get in on the fluctuation. And then when they get stopped out, it's either right at resistance inside of favorable large triggers or it's just like 3 days above. Termination condition. Straight to a termination condition. So who went short and got run over and said, oh no, it's a termination, and then said, well, I better go long at the mid-band, right? And then got run over and said, oh, it really is a short. I'm going to jump in down here when the area breaks. And now you got run over. And I don't know. This is what we do every day, guys. You can't do anything wrong. It's impossible. All you can do is trade into termination conditions and lose enough of them that you don't keep doing it. And this is Cav going, hey, guess what, guys? I'm human, just like the rest of you. This is textbook termination condition. And there's the result, especially on the NASDAQ. And Cav, look at how strong those small triggers are. But DJ, you got to lose this one enough. Perfect situation of taking a trade where there's a turn. I didn't even see your note, Cav. Thank you for that. But that's great. And Cav has been crushing it today. Everything Cav has done today has been freaking brilliant. And it turns out that he's human and he can still make a mistake, right? And then let me get over to crude. Three divergences. It may not go up forever, But this alone is enough to say, hey, maybe not yet. Doesn't this look exactly like the one from the textbook? Guys, I'm running out of stuff to say. I'm going to go mic silence until somebody posts a chart or asks a question. This is where my Skype lights up and my brother's like, dude, shut up. And Phil says, geese. So Daryl, you've taken three winners. I'm sorry, three trades, 2-1, and the one that you want to share with me is the loser. I love that. That's how you get better. Everything says down, odds favorable momentum, clear path, perfect entry. I would take that one every time. The only thing that I could say, and this is like the nitpickiest nitpicky ever, ever, is it gave you the reversal bar, right? Sorry. It gave you the reversal bar. You could have had 4 ticks risk, but you're like, everything says down, I'm going to hold on to it, right? And it gave you the next reversal bar. And then that higher divergence. It's beautiful. You might have saved a couple ticks. You couldn't keep me from skipping this trade. It's perfect. But I see that you're using a range chart, right? So a couple things, and guys, I'm just going to turn it into a lesson because we can make a lesson out of it. People love the range chart, but they don't always read it correctly. Um, or as you learn to read it, you miss out on some stuff. The market's exhausted, Daryl. It's at an outer band. Do you see it? That's kind of a big deal. My brother's got me looking at these a lot on the outer band as I go through his training. Um, and not only is it an outer band, do you see the stranded sellers? So not only did they try to push through it, the sellers got stranded and it came back up. And that's cool. And I still love your entry. I'd take it all day long because of the look. When that HVA line prints and things begin to weaken over here, that's it. If it doesn't break the HVA, the next up bar, I'm out. That's a management thing. That's something that John's working with on me. But it starts with recognizing that the oh my gosh, life is perfect has gone away. And then you get just a little more aggressive on the management. And if you don't have a range chart, you never see it. And this is the stuff that my brother's been teaching. So if you go back and look at a range chart and you look at how often stranded sellers or divergence from a outer band pushes the market the other direction, you really start seeing some good stuff. And that's all it is. I'm looking for, John gave me a great picture, but I'm trying to find where it was. They just talked about range charts a little bit. So Daryl, this is a good one for you. When you start getting those divergences and stuff from the outer bands, you typically get a bigger pullback. Don't think so, Cav. I'm not even sure what the oscillator was. Um, that's the fib to fib tool, right? Or like the 25%, stuff like that. I could never work it in the moment. No, the outer bands have always been there because you've got your mid band and then you have the outer bands, and they're just kind of the moving averages extremes. That's all it is. I don't even have them on my regular charts, but I'll put them on the range chart. So it's a tool on the range chart. 2-tick PSO, Fib says not odds favorable, still PSO at 1-to-1, still not still odds favorable. A fib with no triggers through it, still odds favorable. Um, I sure will, Joel. What's my read? You have to be willing to trade into a term. I was with you. Um, you've got momentum all the way down, right? You're coming from a good top. You're coming from a lower divergence. Everything says down. Honestly, man, um, there's going to be two schools of thought, Phil. The first one is if you're just a high probability trend trader, then you've got to watch this go because your rules aren't met, right? And that stinks. But what I see here is this is your first PSO, I think, right here. Maybe you don't take it. And then this one, that one's kind of hard because, again, all the triggers are above. But the final one, you hadn't reached the key area yet. And it pulls back and it's a 50-50. Maybe this one right here is the one that you could get away with on a 50-50. Um, but the other thing, Phil, is you just have to make a choice. And Joel, I'm going to come to yours next. Have you guys ever heard John Novak's bar fight scenario? And if you've never been in a bar fight, good on you. That's a good thing. But if you have, especially with a big group of people, let's go through it. Large chart coming from, I don't want green, coming from a termination that created the full reversal. There's the down. Smalls are outside of the large. That's great. Coming off a lower divergence. That's awesome. Everything says down. Triggers are wide, angled in the direction of trend. That's great. Perfect area, strong triggers, perfect area, strong triggers, perfect area. Maybe not the strongest triggers, right? So I've got all these things on both charts that are screaming this market wants to go down. And then I've got this bad boy that says it could be problem, it could be problem, it could be problem. And what you do is you kind of start weighing stuff out. Are there more advantages than disadvantages, right? Are there more positives than negatives? And sometimes, and this is where my brother excels, is he'll say, "Yeah, there was a fib here, but I don't expect this fib to hold because the good top lower divergence termination, right? Look at the trigger lines on the retest. He'll tell you he has no intention of this area holding ever, Phil. And it's the same look from the manual or the manual, depending on where you are. Um, he and I talked about it on this one. When you approach with odds favorable, it's normal to expect a bounce. But when you approach with weak triggers, the expectation isn't there that it's going to hold. And if you look at yours, it's textbook, right? Strong triggers into the area, you get a bounce. Weak triggers into the one-to-ones, sure enough, that's what breaks it down. Pretty awesome chart read. I feel just total admission of guilt. I would never take this trade for the longest time because it was a termination condition, because it didn't fit the high probability trend trade rules. And because it didn't, I just kept convincing myself that it was okay to not take this trade. And it drove my brother nuts. And then when he went through that lesson of the strength going into the termination condition, having an effect on the likelihood of these areas breaking, it changed my trading dramatically. It really did. And he stopped sending me dresses for Christmas. Um, so it's a good lesson there. But in the beginning, I didn't have the overall awareness to put it all together. And I would misinterpret and misuse the lesson quite a bit. So go back and study it, and it'll help a lot. Um, Odds favorable, clear path, perfect entry, third divergence gets you out. Joel, you couldn't have done it any better. Does that make sense, Phil? And did that make sense to everybody, I hope? Your chart reading is going to take you next level, guys. But when it starts with the basics, and it's okay to err on the side of caution initially, you're good. Odds favorable, clear path. I think it's important to talk about this stuff. Um, uh-oh. Ron got dinged. Ron, I love it. Perfect entry. Third divergence says exit out. Joel, it was awesome. What a great trade. You didn't leave out rules met. I see it right there. So, guys, these are the conversations that make us better. I don't know. What'd you say? When you post a trade and you're like, hey, let's read it together. Those are amazing. Those are amazing opportunities for growth, right? So here we have large chart led the way, right? Three divergences pushed it beyond a good entry. Everything rolls and changes direction. Now we've got a little weakness, but a clear path. The divergence is pushing. There's fights, guys. There's fights happening at fibs. There's fights happening at fibs. Termination to the mid-band, large triggers never blink. Termination to the mid-band, large triggers never blink. But look at your small chart. Now the large are on the correct side of the synthetics. Now every trigger line is above support. See the difference in the look? Coming in with strength, there's your retest. Phil, this is exactly what we talked about. And now if there's a long opportunity, the likelihood of this pink line holding goes down. The likelihood of this next line holding goes down because they already gave us the retest. And look how the triggers are reacting. It's pretty awesome. And then Daryl, quick profit stopped out. I love it. When it's not perfect, manage it. You ever been mad about getting the 100, Daryl? And you're 75% winners today. Guys, can you imagine taking 4 trades a day and getting stopped out break even on the second every time? Losing one of them completely and still being up money? It's possible. It's possible. Don't have odds favorable. Large triggers are still down. That mid-band's pretty low opportunity, right? Large triggers never blinked. Golly. Can you imagine never fighting those? Wouldn't that be awesome? Letting the large chart lead the way every time. They're making you work for it today, guys. Making you work for it. What do you guys want to talk about? Ron, I'm not sure what the bad word was. Maybe they're reading your brain. Maybe there were bad words implied. I don't know. I'm going to start getting quiet. That's believable. I am in Texas, Cav. I made it home. We have a house. So I am just north of Dallas in a suburb. In version 2 on the templates. What's V2? What's version 2? I'm not sure, Joel. Are there templates that say V2? I know where Tyler is. Up there closer to Texarkana. I'm not sure, Joel. You'd want to ask John Novak that. Weather right now is good, but I can't get my computer to get off of Kennewick, Washington weather. So they're at 33 and sunny. We're nice. We've been 70s sunshine. It's been great. Are there new workspaces for NinjaTrader 8? I delete all mine because I have OCD if I don't use them. 60 and that's not bad at all. I like 60. I'd have to run the indicators to find out. Show me a picture of your workspaces. Um, and you can either ask John and say, John, what's the difference in version 2? Or you could open them both up and take a picture of both charts and see if you can find differences. I'd rather just ask John or Jason though. I build my workspaces. I use the templates, but I'm that person. I don't know if you guys have ever met someone like this. You know when you open up and you get all of your workspaces, right? In NinjaTrader 8, and it has like something for everything in there. And you're like, "All right, cool. That's it." Because this is what I leave in NinjaTrader 8. Those are my workspaces. That's it. That's all I have. I get rid of everything. If you send me a text message, I have to answer it because of that little red one. Um, I'm a little broken, maybe. So I'm sorry. All that to say, I'm not sure what version 2 is. Um, I'm sure he did something different in there. I just don't know what. Weak triggers, divergence, divergence, and sure enough, crude's pushing up higher. Expectations based on patterns. That's odds favorable. That's a clear path, finally. He is too smart. And I guess that was the last ditch effort, huh? We'll see what happens now. And then the S&P right into a termination, followed by a termination. A lot of not my money going on right now, guys. There were some great opportunities earlier. We saw them coming from a lot of you. And then those great opportunities are taking a little break while they fight it out. Um, Resolve yourself to the fact that every move isn't yours. Every opportunity doesn't have to be yours to be profitable. You don't have to be in the market for an hour and a half every day total. You can be in the market for 15 minutes. You too, Joel. Um, and in that 15 minutes of actual seat time, you can hit your goals. You can exceed your goals. With Ron's momentum trades, he's probably what, in the market 4 to 5 minutes a day until the goal is met. Deep sea dive, CL tick stopped as soon as you got in. That's Murphy. Oh, that's the S&P. What was that giant crude? So here's crude for the day. Mid-band and resistance pushes down to support, to resistance, to support, to resistance, to support, to pivot stop out, breaks and doesn't go. There's the fight, pushes down, right back to resistance, and that started the slaughter to the downside. Look where it stopped the first time, right at support. They retest support, and the sellers say, sorry, bud, we're not done. And they push down to the next level of support. Weak triggers at support, all the way up to resistance, where the sellers take over again, and they're pushing down once again. A lot of Fibonacci interaction in that movement throughout the day, guys. A lot of Fibonacci coming into play, creating bounces there. Pretty cool that you guys own it. You know where it's at. Large triggers are down. Every trigger's below the area. But Mark, there's no divergence. Shouldn't I go long? Good day for crude trading, Jose? Yeah. If you're watching your small chart, you can't wait to hit that up button. If you're letting the large chart lead the way, is that working out better for you, Jose? Less things to think about? Yeah, good. Makes me happy. Sometimes that's all it takes. I was trying to trade the Nasdaq, crude oil, and the S&P, and what I found is I was spreading myself too thin. So now I trade 99% Nasdaq, and if there's nothing going on in Nasdaq, I'll glance at crude oil to see if there's an opportunity. But you can do that with anything. Pick your market, right? Large chart led the way again, ladies and gentlemen. Bobby T, are my small triggers on the wrong side of the reversal on this one? Um, yeah, because you don't have room to make a down bar before you hit them, right? Because they're pointing down, it's a little iffy. That's NASDAQ. Let's look at it. And that just happened, right? So small triggers weren't a full bar away, which means it buys you a little patience, right? And then they turn and come against. And sure enough, you don't get anything on the correct side till all the way up here when you no longer want the trade. Bobby, great recognition. After the fact, I suppose. But guys, what Bobby's talking about is a little Nasdaq nuance that keeps you from fighting these small triggers, these strong triggers, um, because they'll kill you. Because remember, your Nasdaq isn't a 5-1 chart. Your Nasdaq is a 13-2 chart. This is the large chart on any other market. But on the Nasdaq, it's the small chart to slow it down. Um, and there's this little phenomenon where if the small triggers remain a full bar away, getting in at the area proves advantageous. Um, and if the small triggers are less than a full bar away, no reason to get run over because they're likely to act as resistance. Wait for the close on the correct side. That's just a little NASDAQ nuance, guys. And if you're not solid with your basic rules, it should. NASDAQ is scary. Daryl, I made the mistake where I literally um, I blew out 7 or 8 Apex accounts trying to learn to trade the NASDAQ. And oh, it was so frustrating. And that's how those little nuances that I share in class came to be. That's how those trigger line locations came to be. Is I shut it down and I started going back through my pictures and I realized that these trigger lines, see how they're a full bar away, works out. The trigger lines had a lot to do with whether or not I was getting run over. Absolutely, Bobby. Thanks for posting it. And so that's why, and it's weird, guys. Today was day 2 of sim for me because I'm going back to class, and I'm my brother's first student for what he's going to be teaching in his seminars. And it's been awesome being on simulator and practicing and getting better and taking pictures and all that good stuff. You said crude oil's in a downtrend? They're pushing, aren't they? Nobody went long here, right? Nobody fought it. Nobody needed to. You did? And Cav, isn't it interesting? And I hate that you lost. If you had a fib right here, that's the lesson you gave us earlier. Is that that changes things, right? But if there's not a fib there, the market's doing exactly. Check it out. Bad bottom, back to resistance, goes down. Bad bottom, back to resistance, goes down. Bad bottom, back to resistance, comes down. They try it again, and then they make it. See this a lot. Bad bottom, pushes up, finishes the move down. It's kind of cool. Bad top, pulls back, goes back up. There's definitely a pattern there. But you nailed it earlier. No worries. Hey, Ron, have a great afternoon, man. I hope the weather's nice for you on the beach. Um, but isn't it interesting that I can say something like let a termination on the large chart lead the way, and then 10 minutes later, I'll take an iffy trade without it because I really want to be in the trade. I'll do that. I've done that where I form an opinion and I abandon my rules. Now I've got everything pointing down. Got that area inside of favorable large triggers. I wonder if they'll come get me. They might. Sure, Walter. Man, Phil, I hate rambling. It drives my brother nuts. It really does. But sometimes there's just not anything to talk about, so I talk about what's in my head. What I wish somebody would have talked to me about. So, Walter, I don't have 8 up. The best thing you can do is do you have 2 monitors, Walter? So what I did is I put this video. Okay. So watch the video real quick. And what this is going to do is this is going to talk you through it. Let me pull up, close that down. What a great way to finish class today. Let me pull up my NinjaTrader 8 real quick for us. And I haven't done this in a while, so if I make a mistake, nobody giggle at me, please. It's on its way. Whoops. All right. So I am going to go to my connections. All right. I'm writing that down. I'll do that this weekend. My wife's taking her last final for her MBA this weekend, so I won't see her. I'll have time. So I'm going to disconnect. Take care, Ace. And then, Walter, after I disconnect, I'm going to reconnect, but I'm going to go to my playback connection. And it's going to give me the historical data. And what I want to do is I want to get market replay data. So let's just say hypothetically I'm going to do crude oil. I'll do NASDAQ because it's current. And what date do I want to do it? You can pick the date. So if you wanted to replay today, Walter, just go in there and put in the 16th. And you're going to hit download. And this is all in the video. We're just going to run through it one time live. So now it's downloaded. It's good. It came back. I'm all right. So I'm going to hit continue. And then when I hit continue, that's when this bad boy shows up. Get over here. My playback started up, but it's not letting me move it. Apparently there is a glitch in the matrix. I'm gonna disconnect again. I think my whole computer locked up. But Absolutely. So, Walter, it's going to be exactly like the live market. It's going to be 100% literally. Your market replay is going to look just like this. 100%. You're going to have your ATM strategies. You're going to be able to enter. You're going to be able to exit. You're going to be able to go back historically and look at it. It is 100% the same as it is live. Because all it is a replay of the live day. It would be like if you were watching the Super Bowl and then you rewound it. It's still the Super Bowl. It's just a replay on it. So it's a great tool and it's a great way to double, triple repetitions. So follow that link and look at the video real quick. On 8, it's even easier. Once you get hooked up, all you have to do is open up your workspace, and it becomes a real easy process to go through and practice. Great day today, guys. Lot of great questions. You're welcome. Lot of great comments. Great pictures. Cav, awesome trading today, man. Great work. And thank you for not only showing winners. Thanks for showing a mistake. I don't think people get it, but that's encouraging to people that are making mistakes, is to see that somebody that's put the time and the effort in still has the occasional lapse of judgment. I do. Everybody I know does. I took a long trade this morning. My brother had just gone short, and he goes, "Dude," he goes, "Man, I flipped my brain." And it does. It reminds you that even the best traders in the world are going to make mistakes. Not that I'm the best trader in the world, but you know what I'm saying. The people that know what should happen still do it because we're all human. Embrace it a little bit. So, yeah, we make them, Phil. We definitely do. But they're helpful. If I see a mistake, it helps me learn not to. And Phil, I got to be honest with you. Me talking through your chart where you said you got lucky, um, yeah, I know exactly what you mean. Honest to goodness, it made me relive the lessons that John Novak gave me, and it reinforced the lessons. And it's cool because it gave me the opportunity to teach the lesson, which reinforces my knowledge of it. I really don't think you guys understand how thankful I am when you post in the room and make me work a little bit because it really does. It's totally selfish, but it makes me a better trader. So, guys, that's it for me today. I hope you learned something. Can't thank you enough for the participation.